now the much awaited number of ICICI Bank is out. I just have the basic numbers. So basic number, there is a loss of 120 crore, but don't jump to any kind of a conclusion with ICICI Bank, because there are a lot of extraordinary elements which are at play. Same time last year they had sale of investments which kicked in their net profit because they sold 2% stake in ICICI Pru life insurance business. Last quarter there was a large income which came into ICICI Bank's net profit, largely because of their security, the stake sale in the securities business. But even though the brokerage assumptions were that they would report a mild profit for the quarter gone by, what they've done is that they've reported a loss. When you are reporting a loss, it is largely an account of high provisioning. Why have they done higher provisioning despite Reserve Bank of India's cleanup mandate which they got in Q4? We'll try and connect with the management. But prima facie, if I have to really talk about the number is that they have reported a net loss of 120 crores. Poonam, do you have more details on is this in provisioning loss?
Page. Right. In fact, if I'm looking at the numbers there, I would say that some amount of respite for sure in terms of the gross slippages. 4036 crore is the slippages versus 15,700 crore that we had seen in the last quarter. So pretty much a respite, at least in terms of the slippage front. If I'm looking at the gross NPA in terms of the total number, it's 53,464 crore. However, very flat gross NPA numbers. Slippages sharply down. We're also seeing a loss during this quarter of 120 crore. Some of the analysts were expecting a profit and some of them were expecting some amount of loss as well. But this time, if you look at the consensus numbers, we were still getting that ICICI Bank would have reported a profit of 1280 crore. However, they've reported a loss of 120 crore. Net interest income is fairly in line. The margins, of course, have declined to 3.19% versus a 3.24% on a sequential basis. So some amount of dip in terms of the margins there for sure. If I'm looking at the provisions also during this quarter, we are seeing that the provisions, in fact, at 5,971 crore is slightly lower than 6625 crore in the last quarter. So yes, the provisions remain fairly elevated. Some amount of respite coming in terms of slippages. Margins have slightly dipped to 3.19 in line. Other income, of course, stands at 3851 crore versus 3387. They did state that they would be, in fact, there was supposed to be an ICICI Pru life stake sale of nearly around 2%. I'll just look at the notes, but on the face of it, these look slightly decent numbers, and I'll get back to you more with some more details.
Okay.
Hemendra, this is Poonam joining in from the Mumbai studio. What do you make of these numbers, especially in terms of the asset quality, Hemendra? We're seeing that the slippages have declined to 4,000 crore versus nearly around 15,700 crore in the last quarter.
In the asset quality, it appears to have done quite well, given the state and what things people were expecting. Therefore, this loss is rather coming as a slight surprise. Now, is it the absence of other income or some extraordinary income which has caused this loss? So that's what we have to see, because both on the NII front as well as the slippages and NPA front, there is nothing alarming for to have contributed to such a loss.
Right. What? Right, okay, let me also bring on board Krishnan from SBI Caps. And Krishnan, the gross NPAs or net NPAs on a sequential basis have gone down, but yet there is a net loss. Do you think we should not read too much into net loss, because last time, same quarter, they had a bump up because of extraordinary income of investments?
Yeah, so haven't had a very detailed look at the numbers. Is a bit but I think what I can see is at an operating profit level they have made about 5,800 odd crores, and their provisioning number is just north of that number, so I think closer to 6,000 or 5,900 odd crores. So it's important to understand what that 5,900 crores is all about. I think they have booked all of the MTM losses in one go. That seems to be definitely one of the notes to accounts that I just very quickly read. but what is the rest of the 5,900 crores made up of? I think that answer should then help us, would conclude more sanely around how to read these earnings.
Footnote says that this is the lowest NPA or lowest gross NPA addition in last 11 quarters. Is that an indication of a trajectory which is bottoming out for ICICI Bank, or it's too early to say that?
No, I mean, even for the system, I think if you look back at what the Reserve Bank of India had published in its June 2018 financial stability report, I think it's been fairly clear to us that at a system level also you are looking at NPL formation kind of normalizing, NPL formulation definitely trending lower compared to where we were, but that's almost like expected across the street. So that shouldn't come as any surprise. That doesn't come as a surprise to us. Having said that, the fact that ICICI Bank has reported fairly low slippages, maybe a 3-year low, that definitely augurs well. But as I said, I think NPL formation is just one part of the story. That's what is happening on the balance sheet. There is also a P&L impact for those NPLs, and there is lingering impact of that P&L. So to that extent, provisioning will continue to hurt banks for a while longer. Having said that, as I said, unless you understand what these provisions are made up of for ICICI Bank during Q1, until then it's an incomplete information that we'll probably be sharing.
Right, Krishan, this is Poonam joining in from the Mumbai studio. Just to give you further information in terms of the breakup, in terms of the asset quality, 4036 crore is of course the entire gross additions that we are seeing. Recoveries and upgrades from NPA stand at 2036 crore. We're also seeing that the provision cover in fact has improved to 66% versus a 60.5% in the last quarter. Again, giving you more information, net loans to companies, that is the restructured loans rather, stand at 1413 crore during this quarter itself versus a 1553 crore in the last quarter. So more or less the net NPAs and net restructured assets as a percentage of the net customer assets that has declined slightly to 4.43% versus a 5.03% in the last quarter. So this is the entire picture in terms of the NPAs asset quality, Krishnan. Recoveries again stand at 2036 crore. Now, what do you make of the asset quality?
Right. So as you said, so 4,036 crores was probably the slippage number that you mentioned. Is that correct?
4036 crores the slippage, recoveries at 2036 crore, provision cover at 66%, and net slippage as well as restructured assets stand at 4.43 versus 5% in the last quarter.
Right. So as a guest just before me also had mentioned, I think it's fairly clear that NPL formation has normalized. It's also clear that recoveries are beginning to pick up some pace. As we have been highlighting for a while, it's very much possible that in some of these accounts like NCLT, like the accounts that are undergoing NCLT resolutions, your existing provisions may at times be inadequate. So there are signals that you get from ongoing NCLT resolutions as to what you need to do about your existing NCLT exposure. And hence, ICICI Bank may have decided to shore up the provisioning coverage during the fourth quarter, which is what is reflecting in an elevated PCR. And all of these things are good. I mean, even if you're taking a P&L impact just to shore up your balance sheet, I think that's a good, we believe it's a good outcome. So from the face of all the numbers that you have shared, Poonam, it definitely does look like these are not alarming numbers. Why it is translated into a loss, as Hemendra mentioned, there is definitely lower other income, and hence to that extent your operating profit is probably south of 6,000 crores, and you're providing and you're using all of that operating profit to almost provide and shore up your balance sheet. So it's not such a bad outcome.
You know, I must also point out that whereas we are overly obsessed with ICICI Bank's corporate loan book, look at the retail book. Retail growth is 20%. The total retail advances as percentage of the total book now is north of 50%. The fee-based income which you get by selling other business activities, mutual fund, insurance, that is up 16%. So Hemendra, do we have a bank where, if I have to position it, and I'm going to take the most optimistic side here, a bank where the NPA problem is getting arrested and they have a solid CASA and a retail franchise, and markets have to recognize that it's high time markets say that ICICI Bank is no longer a corporate bank because 55-56% of the book now is coming from retail?
While I would agree that the corporate loan may have, NPA may have been arrested, I am not at all optimistic about the retail loan, because in this entire economy, what we have seen is that there has been a lot of job losses in the telecom sector, even in the IT sector. Now, these are your prime candidates where you give retail loans. And the kind of huge retail loan growth that you've had over the years, it tells me that there is going to be a huge buildup of NPAs in the retail segment. Now, any bank which is focusing, and most banks are giving the same story, that they are growing retail. Actually, they're just trying to grow retail to outgrow the corporate NPA. And such a strategy is going to further compound the problem. So you'll have a period like just now where the corporate NPAs may get stabilized. But this is just, on the eve of where the retail NPAs are going to start shooting up, because the state of the economy, everyone knows on the ground, nothing much is happening. And then in India, there is a very limited retail absorption for credit. So in such an environment, I would not at all be optimistic of banks which have, started growing their retail loan book so aggressively.
Right. Krishnan, what we are again awaiting for, and I would have really been happy if ICICI Bank would have really spoken to the press this time, but it's just a con call for the analysts this time. But what do you really make in terms of the entire overhang that we are seeing regarding the allegations against MD and CEO Chanda Kochhar, and how do you really rate the prospects going ahead of Mr. Sandeep Bakshi himself taking over as MD and CEO, or for that matter, now that he is the whole-time director and chief operating officer? How do you see the overall picture in terms of corporate governance and in terms of further clarity in terms of where the bank is going ahead? Krishnan?
You're right. I mean, we won't specifically talk about the key names involved, right? So, but what I think as an investor, as an analyst, you really want is less uncertainty about legacy assets. You want to clean up the bank as quickly as you possibly can. That cleanup could be existing incumbent management being held responsible for certain actions, and then you take a clean break. Or it could be that all the processes were duly followed. So either which is, an external probe is then able to clear the air. You are able to put that uncertainty or that overhang behind, and that generally augurs well for investors and analysts. I think then you're able to take a more sensible call purely on the fundamentals of the bank as to where the bank is headed, where the asset mix is headed, what is improving, what is not improving, etc. The overhang doesn't help, and it hasn't helped this particular stock for a while now. Having said that, how this entire process will eventually pan out, I think, is beyond what I can share.
Right, Kunal Shah also joins us with his quick take. Kunal, whereas we are trying to magnify these numbers and separating the good news from the bad news, I am afraid even though the NPA cycle is getting arrested, not too many write-backs have occurred. At a time when we are talking about economy getting better, NCLT issues getting solved, for ICICI Bank for the quarter gone by, not too many instances or too many accounts have really managed to become from bad loans to good loans.
So overall, when you look at gross NPLs, they have come off from 8.84 to 8.81. So there is a marginal decline in the absolute term. But when we look at in terms of the accretion to GNPLs, that's lower than what everyone was expecting. It's around about 4,000 odd crores. In fact, in terms of the recoveries and upgrades, we still need to wait and watch, because there are only few cases within NCLT which have got resolved. So larger part of this resolution should come over next 2 quarters. So any which ways, it was not anticipated that there will be significant write-backs as such. But overall, in terms of the trend in GNPLs, that has been, or maybe the accretion to the GNPLs, that's been better than the expectation.
Krishnan, my immediate follow-up question would be that are we now at the turn for the banking sector? You know, for the longest time, those who bought retail-based franchise, HDFC Bank, Kotak Mahindra Bank, they've hit a home run. But do you think now it's time to think differently? That's part A of my question. Part B of my question is that 9 out of 10 analysts are currently bullish on ICICI Bank, and yet the stock is not going up. It is not creating shareholder value. Why is that, Krishnan?
Right. So as I said, overhangs like the ones that we are currently faced with in ICICI Bank doesn't help any investor, any analyst. So it is but natural that the stock remains a drag for a while until these things are put to rest, right? Having said that, I think corporate lenders for the past few months now, I think as we turned into calendar year 2018, we felt that somewhere towards the middle of the year, you should start getting constructive on corporate lenders, because earnings catalyst will begin to play out, NPL formation will normalize, and recoveries will begin to kick in. So NCLT resolutions will begin to happen, some recoveries will begin to kick in. You have seen some evidence of that in ICICI Bank's numbers. Having said that, it still needs to translate into earnings recovery. Only then do you see, investors begin to switch out from retail lenders and, move money back towards corporate lenders. Until such time, valuation multiples for the B2C lenders, which are consumer lenders or retail lenders, will continue to stay, quite elevated, continue to, shoot through the roof. Because today 90% or 95% of the profit pool is residing in the retail lenders, right? So what do? Obviously, money will chase such lenders because that's where the profits are being made. Unless corporate lenders are able to demonstrate that earnings are back on track, or earnings are beginning to revive, earnings are beginning to recover, and even in this quarter, ICICI Bank has reported negative earnings. So to that extent, I think we are not yet completely there. But is this the beginning of a cycle where you now start to be more constructive on the corporate lenders? Are earnings now at a trough levels? Probably we are very close to that. We are probably closer to the end of the tunnel than we ever were.
Kunal, this is Poonam here from Mumbai studio. Kunal, what do you make of the entire valuations, and do you see that post the slippages coming in, normalizing hopefully this time? It's the lowest in 11 quarters. Do you think that there is further room for the stock price to go up, given that it is trading at attractive valuations? And however, given the fact that the stock is already up from around 23 odd rupees just in the last 5 days, it was at 270 and now it is at 293. Further legs for the stock price to go up?
Yeah, so overall in terms of the expectations, the behavior of the asset quality has been better, and I think the core momentum has also been sustained. The only thing is because of the increase in the coverage, which is also, I would say, the positive step from the management, we had seen maybe the higher provisioning, which is leading to a loss. But otherwise, operationally, it has been, say, in line or say better than the expectation. So to that extent, again, the stock should react positively given the valuations wherein it is trading today.